One of the biggest questions that a lot of first-time home buyers have is how much property can I afford? Now, obviously, this is a really big, crucial decision that you have to make. There are a few guidelines that I can give you, though. A lot of the general public does recommend 30% or less of your income should go towards housing costs. I know in the DMV area that can be pretty challenging unless you're making a lot of money, but that is a good rule of thumb. From the lender's point of view, you need about 40 to 45% of your total income can be servicing debt. So this isn't just your mortgage, it's also your car payment, student loans, maybe some furniture that you put on credit. So you really want to roll all those total debts up together, and it works out to about 45% of your income is what they'll give you a loan for. So if you make $10,000 a month, you can service all of your debt at about $4,500 a month. So if you only have a mortgage, you can get about a $4,500 mortgage payment. If you have a car loan for $500, you can get a mortgage for about $4,000. I know these are ballpark numbers, and obviously everybody's situation is a little different. So you do want to talk to a lender and really iron that out. But then also think about what you're really comfortable with. Just because a lender says you qualify for $4,000 a month doesn't mean you want to spend that much. Maybe your rent currently is $2,000 a month. Okay, well, let's stick to something closer to that ballpark. Some other hidden costs that some people aren't aware of. You do have obviously taxes and insurance on your property. So these costs do actually tend to go up over time. A lot of people do get upset about that, but I actually think of it as a win because that means the value of your property is going up, and that's why your taxes increased and why your insurance is increased. Because they are just taking into account that maybe your $500,000 property is now worth $600,000, so they're going to charge you a little bit extra in taxes and insurance. But don't fret about this because that means you have $100,000 in equity. That is a big, big win. Some other things some people forget about: maintenance, of course, and repairs. A good ballpark rule of thumb is about 1% of the purchase price per year is what you'll need to update, maintain, fix your home as time goes on. So do count that into your numbers as well. And lastly, if you do have an HOA payment, these are usually in condos or townhomes, do factor that. Some of them could be as low as $100 a month. I've seen some in the DMV area that are $1,200, $1,300 a month. So it can really make or break your budget. But if you need some help reviewing all these numbers and seeing what's best for your situation, DM me today.